a lot of you just talked, multiple of you said the word education. So when you're talking with these people, the wealth advisors, the institutions, how much of it is explaining ETFs? You talked about ETFs used to be viewed as a weapon of mass destruction versus how much of it is explaining blockchain, Bitcoin, what have you? Like, what are these conversations you're having? And these questions, they're doing the due diligence process. Sometimes it can take years. Hopefully it's going to be expedited for these. But, like, what questions are you answering on your side, Matt?
Yeah, I think there's sort of two sets of questions. And we've been educating this audience for 7 years, right? We do 20,000 meetings with financial professionals each year about Bitcoin and crypto. They ask two types of questions. One is due diligence on the products. How does custody work? How does trading work? And they just need to walk through that. That's not different from any ETF. You would need to do that with any ETF. And the other are sort of more fundamental questions about Bitcoin. Where does it fit in a portfolio? Importantly, how do you value it? Why does it have value? They still have those fundamental questions, but I will say they've changed over the last 5 or 7 or even 3 years. They used to have more fundamental questions. Will Bitcoin still exist? Those have vanished from the ecosystem. They used to get held up on custody and how it works. Those are much easier to answer now. So the questions are getting better. The due diligence is getting quicker, but it still takes, 6 months, 12 months, even more.
What bothers or disturbs me a little bit, in sort of communicating with clients about financial investments, you have to explain the opportunities and the risks. So actually what concerns me a little bit is the questions that investors don't ask. I mean, they just don't understand sometimes, what the network is. Is network usage growing? And that's true for, the other ETFs that launched last week as well. They talk about the price, they talk about volatility, they talk about security, but they don't understand a network without users has no value, right? Has no interest. So I know you talk about it, Matt. I'm just trying to highlight, like, sometimes you have to prompt them to ask the right questions about these kinds of investments. I know you talk about it as well, Robert.
Yeah. And I think there is one theme in particular in our education journey with clients that's coming up more significantly now. And that is how to think about Bitcoin from a risk perspective. Because Bitcoin on a standalone basis certainly is a risky asset. It's an early emerging technology. Its adoption trajectory is still somewhat uncertain. There's regulatory uncertainty, et cetera. But when you think about it in the context of a portfolio at a modest allocation, then that conversation can actually turn on its head. Because other than exposure to interest rates, there's a fundamental basis on which Bitcoin you would expect to be either uncorrelated or in some cases inversely correlated to some of the risks that investors face in their portfolio. So you're starting to see that light switch go on a little bit of, this may be a flight to safety in the face of debt and deficit accumulation, currency debasement, inflation, geopolitical disorder, all these types of other risks, right? And so that is the really important journey that a lot of our institutional and advisory clients are on.
So I guess the first question is, I've heard from some of you guys up here and from other people, a lot of the allocations that some of these advisors who are already in, not including the people who haven't approved it fully yet, is like a 2 to 3% allocation. So I guess my question would be, one, is that accurate? And two, when they're putting in their portfolio, are they understanding Bitcoin, or are they just looking at it as a portfolio diversifier? Are they looking at it as alternative investment? Do they see it as an aspiring store of value? Like, is it some advisors are viewing it different ways? Like, what are you guys seeing on your end? We'll start with you, Matt, I guess.
Yeah, I think we see all of those different approaches. So it is the case that it's 2.5%. I think the average Bitwise client is right around there. And I would say a few years ago that was 1%, and I expect in a few years it'll be closer to 5%, which is what looks really great when you optimize your portfolio. They're putting it in for different reasons. Many people are concerned about the dollar. Many people care about Bitcoin for the exact same reasons that a lot of people in this audience